going back to YC and my investors, I'm saying, yeah, I don't think we're gonna be able to launch in 3 months or 6 months or 12 months.
What are they saying?
They're saying many things. They're losing confidence, one, and two, they're saying that, um, well, if you can't launch in this X amount of time, do you have certainty on when you can launch? And I didn't have that. And to some extreme, we were thinking maybe we launch without the regulation.
Okay, welcome back to Prolific. I think the best thing about doing Prolific is I get to share the actual conversations that I have with people on a day-to-day basis. And one of the people that I'll be doing that with today is a good friend of mine. What's interesting is the people that I'm most interested in speaking to, I like to call molders. And these are the kind of people who they will reshape something or they bring something new to an environment. Or maybe they're constantly searching for a way to solve a problem in a different way. And this is someone who I consider a molder. It's someone who has continued to reshape how things look time and time again. And his latest offering to the world is Fingo, which is Africa's first neo bank, where he's the founder and CEO. So I'm super happy to be able to have this conversation and share this conversation with you because this is what we're actually like when the cameras are off. So welcome to Prolific, Mr. Kiiru Muhoya.
Thank you for having me, brother. I really appreciate it. And thank you for the wonderful introduction.
No
It's great
problem.
to be here.
No problem. I was trying to embarrass you, but I feel like you're used to all the accolades now.
I mean, the hype is welcome because sometimes you need it. Trust me.
What's that?
You forget, man. You forget, anything that is worth doing is extremely hard. And sometimes in the midst of it, you're like, did I do that?
Yeah.
And so it's welcome and I appreciate it.
Wow,
Thank
you see, he's already begun with the gems, you see. So obviously we're gonna have a conversation about loads of things. And this is like unscripted conversation. So we're gonna talk about loads of things. Some will obviously relate to Fingo, but I'm most interested in talking about you. And having conversations like this are quite difficult because we know each other to an extent. So now I'm gonna have to approach this as someone who does not know you. And that's my challenge. But I think the easiest place probably to start is what I remember of you when we interacted in the early days. So we went to university together, and one of the first times we were interacting with each other was when I came back to campus having graduated, and Kiiru and I were basically pitching organizations that we were working on to people who came to an event. I was building something called Pamoja, which was talent acquisition for African startups. And Kiiru was building something called Build for Kenya, which did socially affordable housing for people throughout Kenya. My question is, since that day and maybe just before, I realized you like to solve big problems. Small problems, I don't know whether small problems have ever really got your attention in that way. Why big problems?
It's a fantastic question, man. This goes back to what I want to call my origin story. So I've never really liked school.
Okay.
So I've tried to quit school 3 times. The first time was right before my IGCSEs.
Okay.
I told my dad, listen, I don't want to do this. Can I just be an entrepreneur?
Right.
And my dad made me promise, or he promised me that if I do well, I can quit.
Right.
So I did well. And then he convinced me to join A-levels. And
Right.
then he was like, okay, you finish A-levels.
Right.
And then you can quit. And I was like, fair. So I did A-levels. I did well.
He's a salesman, huh?
And then eventually I quit.
Okay.
Right. And I was not planning to go back to uni or any other further education. And the day I quit, literally the day I quit, I Googled top 3 problems in Africa that I was going to solve. Like literal Google search.
How old were you?
I was 17.
Wow. Okay.
So I Googled top 3 problems in Africa I'm going to solve. Went through many lists, infrastructure, water, sanitation, disease, like the lists went on. In the top 3 consistently was housing.
Okay.
And housing was personal because I lived at the time in Nairobi, and I still live in Nairobi, where it's like housing dystopia. You have slums in the center of the city, and then 5 minutes away you have like the most lush suburbs. So seeing that, I was like, okay, housing is big. So I picked housing off of that list. Nothing else off of that list. Picked housing. Spent a year building a company built for Kenya, and why it's called built for Kenya is, again, just very first principles. What do you need to do when there's no housing? You just need to build some housing. So I was like, let's just build for Kenya. And then 2 weeks later, I had invited like a bunch of my friends from high school, who, by the way, were graduating and were meant to be going on wonderful trips. And I'd invited them to some village to build a house with me. And then that's, spiraled into 12 months of capital raising and building affordable housing. And two things happened during that time. One, I realized it wasn't a business, because actually all we were doing is raising non-profit funds and then building housing. The housing we were building was with different materials, and it was interesting because it was in innovative materials based on the geography, but it was more of a social enterprise, so it wasn't a business. But we had recent capital, like $500,000. I was like 18. I was like, I can live off of this, and I love doing this. And then,
what was the average cost to build one socially affordable house?
so average cost was about $20,000.
Wow, so you could build what, 25 of them?
Yeah, about 25. But we never built 25. We only built like 12. And then my family intervened and made me go to uni. But I won't forget something. My uncle specifically said to me, listen, you're never going to solve Africa's... Like, how many houses do you need to build to solve the African... So not even Africa, the Kenyan housing deficit annually. The deficit was at like 200,000 houses.
Wow.
And how many have you built in 1 year? I said 12. He's
Wow.
like, you need to go study to learn how to scale. At that point, I was like, fair. Fair. So yeah, that was the kind of how I got into like solving big problems.
Amazing. So then that was at 17, and you did that through to after, it was around 2018, 2017 you stopped?
Yeah. So around the time I was in first year, second year of uni.
What made you stop?
Well, it was running in Kenya. And
Right.
I was studying here in the UK.
Yeah.
So I just couldn't run it anymore.
Yeah.
And we just wound it down, and we had funds left, and we just gave back
wound
the
it down.
money. We gave back the money, and it was hard, but even based off of the trajectory we were going, we're not, leave alone like make an impact. We're not gonna make a dent
Right.
on even just leave alone the deficit, the increasing deficit annually. So I was just like, I can't. Yeah, I kind of was like, I need to figure out a way to do this that makes sense on scale.
Well, there's a lot of banked young people who are glad that you gave that up. So okay. So I think when one of the times that we were communicating was like over a summer when you'd gone back to Kenya after graduating and you were figuring things out. One thing that I say to people is, if you're going to build a business, go work for someone who has built a business. It's free education, and don't worry about what you're getting paid. I think at the time you were working as an executive assistant to the CEO at Acorn, and Acorn, it was working on infrastructure as well, right?
Yes.
What was that experience like, and specifically, what did you learn from working just underneath that position? Because Acorn's it's a big company, right?
Massive.
Right.
So it was first a wonderful opportunity to learn from an incredible CEO. I think, so I graduated and I was like, okay, back in the storm, but now let me do something different, something scalable, software scalable, but all my connections were in, housing and real estate. And his name was EK, is EK. He's a CEO of a company called Acorn, which is one of the largest housing developers in the region. And he was like, listen, just come shadow me, learn how it's done. And I was like, perfect. So I was just his shadow. I was carrying the briefcase. I was following him to meetings. And that's when I learned there's a real difference between your perception of a founder CEO and the actual role of a CEO.
Right.
The actual role of a CEO is intense. There was I observed many late hours, I observed many meetings, I observed many intense decisions, and I began seeing interactions as well with scale,
Right.
So I had built 12 homes in a year. They were the largest housing developer in East and Central Africa, and
It's
still
different
are.
level.
Like that was skill.
Yeah.
Like that was real skill.
Yeah.
And sitting there looking at their plans for the next 10 years,
Wow.
20 years,
Wow.
right? The funding it took, the manpower it took. I think that now taught me, okay, this is like real business. And seeing it from the CEO's point of view is also like a perspective of business in Africa, right? Like business on the continent is not business anywhere else. Like, there are nuances, even your per se Western education doesn't prepare you for business on
Wow.
the continent, right? Like it is.
What was one of the things that you realized, like at every level, it must be cultural, timing?
Yeah,
Maybe.
I think personality.
Okay.
So it takes a personality to be a CEO to that scale. Like less friends, lonely at the top, and you have to be so good with people because to some degree contracts are not enforceable. They're not.
Yeah.
You can't take a watch contract to the court of whatever in
Yes.
Kenya and expect a turnaround time that makes sense. Like contracts are not enforceable to a large degree. To some degree they are, but to a large degree the justice systems are largely ineffective and slow compared to anywhere else. So you have to be so good with people that by the time you're executing with a team, you know them so well that they are you're kind of a seamless function as opposed to relying on a sovereign to kind of help grease the wheels of business. But that's not the case.
Very interesting, especially now with your position as well. I suppose your position is CEO, but maybe you're still sat as founder CEO. But that's something very key that you've picked up in terms of relationships. I say this as well because when we were having dinner maybe 2 years ago, your phone didn't stop ringing, and it was fundraising season. So I completely like understood there were partners in there, and you were constantly like, "I'm sorry, I'm coming back. I'm sorry, I'm coming back." But I think that is the relationship part and the cost of doing that. Do you know what? Let's go into this next thing because we're gonna spend a good amount of time here. I want to read something to you. Something you wrote.
Wow.
Frustrated and angry about the state of our continent, especially how young people are systemically denied access from key services such as finance. A group of us have come together to rebel, refusing to accept that the youngest continent in the world should have no solutions designed for its demographic. Many iterations later, we built Fingo. Right now, you are providing access to young people in the continent in under 5 minutes, which is phenomenal. What was that transition from you going from the real estate, working under EK, to being like, it's go time?
Yeah, I mean that sends the right messages when you read stuff like that, which is frustrated by the continent and the fact that it's not giving services to young people. I think that's it. And to be honest, like it's a really simple story. So, I was working for EK. I was prepared to learn for a couple more months. I tried to open a bank account, and they disrespected me. TBH.
This is how it
That's
always
it.
begins.
They disrespected me. T-shirt, pants. I walk into a nice branch. I get, you get a stare down because you're a young guy.
Yeah.
The initial perception is you don't have money, you don't belong here. And you get sent to the longest line, the worst customer service. And, eventually it took me 3 weeks to get an account open.
Wow.
And at the end of that process, I was thinking, I am amongst one of the privileged Kenyans to actually get an education, to get a job, and I can't get a bank account. What is the average Kenyan, let alone the average African in lower per capita income states? What are they doing?
Yeah.
How are they experiencing service? They're not. They're being absolutely denied. So I walked out to that and I was like, I will just build a bank. This bank will be for young people. F this, guys. And yeah, that was the journey to starting Fingo.
I mean, before you carry on, let's just stop there. He said, I will just build a bank. This is the
Famous
level of
last
ambition
words.
that we...
Famous last words.
That is... I think that also goes back to why you are the person for this. Because of the conviction in what you just said. So even when it gets tough, I hope that you still maintain that it's there. Like you were very clear about what you needed to do. So how has Fingo been?
Fingo has been a roller coaster.
Yeah.
I want to say we started at the top of the roller coaster,
Okay.
where like everything was clear. We had a very clear view, clouds,
Yeah.
finish line. Oh, it was beautiful.
Yeah.
And so we started full time in 2021.
Okay.
3 months later, we had raised a pre-seed round, and we had joined Y-Combinator.
Yeah.
We were and joining Y-Combinator was like, so we joined without, and this is a really interesting, we joined without any product.
Right.
We joined without any customers,
Wow.
any contracts with anyone, just a pitch deck.
You think that's possible today?
It's possible today. In
Because
fact,
you're in Africa, or
a double-digit percentage of companies that join YC join the exact same way we did.
wow.
So I'm not sure the exact proportion, but above 10% joined the same way we did.
Wow.
So, and the reason we joined is we just applied.
Yeah.
One night, I just spent all night writing that application. We did our interview, which we thought we bombed. By the way.
Right.
Like we were, a couple of co-founders just talking over each other, like bumbling. Actually, I remember the morning after the interview, I gathered everyone in the meeting room and I was like, we don't need YC. It's not even that big of a deal. Let's just keep working.
Yeah.
And then Michael Seibel, the CEO of YC, calls and he's like, you're in.
Wow.
Backflips, right?
Wow.
Backflips. So that was top of the roller coaster.
Yes.
We raised a seed round from some incredible investors.
Yeah.
Monzo, which partly inspired Fingo, the CEO and founder, invested alongside like some other fintech giants and amazing funds across the US. We were oversubscribed. Over the 200 companies in that batch, we were voted in the top 10.
Wow.
We were the only ones in Eastern and Southern Africa to be in that batch as a company. Wow. I think probably the top 5 in Kenya to ever be in YC. Like it was all very like top of the mountain.
What made you think you bombed the interview? Because my perception of a YC interview is they ask you a question in plain English, and if you use jargon, you fail. What made you? Were you saying too many words? Did you just feel like they weren't smiling?
Excuse me. We bombed the interview because as founders, we were 3 of us at the time, and we were doing the interview, and it's a Zoom call because it was during COVID. So Michael asks a question, all 3 of us try to answer.
Right.
We hadn't discussed by
division of response.
Yeah, exactly. So all 3 of us tried to answer, and at some point we were shushing Michael so we could answer.
Oh wow.
We were like, shh. And then at the end of the interview, that feeling of your heart dropping, like, damn, we fucked that up.
It couldn't have gone worse.
We didn't even have to say it. We all knew. We all just silently left the room and went and thought about what we'd just done. And then the next day, we're like, damn, we shushed.
And then that's when you were like, we don't need them anyway.
Yeah, we're just like, we don't even need them. Yeah.
Fair enough. And then they come back to you and they say you're in. So, okay, cool. That's the top of the roller coaster. I want to talk to you about YC after as well. Then what happens from the top?
Of the roller coaster, we raised our funding, a couple $1 million. We promised investors that, hey, we're going to launch this in 3 months. This is September of 2021. We're going to launch this in 3 months. So Q4 2021, we're going to be live. We're going to be launched. One barrier to launch, which is we're the first digital bank in Kenya and East Africa. The central bank doesn't know what we're doing, right? So we have to tell them what we're doing. They have to give us permission to launch. So naively, I told everyone it's going to take 1 or 2 meetings. We launched in May of 2023.
Yeah. So 6 months, 7 months.
No, that's a year and a half later.
Whoa.
So that was 2021 September.
Sorry, 2021 to 2023.
2023. That's almost 2 years later. So that was top of a roller coaster, and then slowly we began dealing with...
Question for you. Was regulation, as builders, when we butt heads with regulators, was there anything in what they were asking for justified, or was it just overkill?
So I have many feelings about it, but in terms of my general feeling is that there was no regulation for it. There was no understanding of it. So telling the central bank that, hey, we want to launch a digital bank, to their credit, they were receptive, but they were like, we don't really have regulations for this. You're gonna have to wait until we build them. And we're like, no, let's build them together. Let's
They
kind
don't
of
want
go
that.
through that process.
Yeah.
And obviously it's we're not per se bankers. We're
Yes.
like startup guys.
Yes.
We're like, just let us launch and you can catch up. But they didn't allow that. So it took a while. That took a while.
Interesting. And I wonder what relationships. I suppose YC has no bearing on this. This is a matter of
It's
okay.
an Africa thing.
It's Africa. Yeah.
This is the Africa thing.
Yeah.
I'm going back to YC and my investors. I'm saying, yeah, I don't think we're gonna be able to launch in 3 months or 6 months or 12 months.
What they say?
They're saying many things. They're losing confidence, one, and two, they're saying that, well, if you can't launch in this X amount of time, do you have certainty on when you can launch? And I didn't have that. And to some extreme, we were thinking maybe we launch without the regulation,
Okay, yeah.
which is
I can imagine
a
that.
common
Which
startup
is- yeah.
thought. But at the same time, as we were pondering that, there was a clampdown of a lot of startups that had launched without regulation, and they actually just had to shut down, and they could never operate in
Wow.
that market again. And we were like, maybe let's not do that. So it was a tumultuous time. That was the bottom of the roller coaster.
I wonder, some of the questions that the investors are asking, they come from an environment where in San Francisco you can launch next week with like a whatever, beta product or whatever. Is part of this a failure of not having enough capital coming from the continent to invest in startups? The reason why I ask that is perhaps we would have ended up with investors who understood what was going on and maybe had better relationships with the central bank or whatever. So is that something that also needs touching on?
Spot on.
All right. Okay.
Spot on. Y-Combinator is like the deep Silicon Valley, prolific startup investor.
Right.
Their expertise is granted, like they have massive investments in Africa, Latin America, Asia, etc. But they're not gonna help you unlock the central bank. They're not gonna help.
It's on you, buddy.
That's on you. That's on you, right? And so that's where the role of your local kind of well-connected angel investors plays in. Okay. And I will say that's what unlocked it for us.
Yes.
Ultimately. We had some great angel investors that were able to, kind of negotiate on our behalf,
Right.
Eventually leading to a spectacular launch. But it did take time. And even then, even in 2023, almost 2 years later, we were still the first digital bank to launch in Kenya and East Africa and Central, like all those regions. We were still the first. So as much as it took time, like I want to say in SF years it was like 100.
Yeah.
In Africa years it was like 2 months. Like it was still very fast. So things move differently. There's definitely less understanding of why and how things move differently, especially from Western investors. But that's why you need a balance of like strong local angel investors to make that happen.
That year and a half must have been excruciating. What are you doing? How are you? Look, at the end of the day, the team has leadership, but they will probably look to you as a roadmap or vision to give the vision. There's a very clear block that everyone's aware of.
Yeah.
What are you doing? How are you advancing the company? And how are you managing yourself in that period? Because you must feel like there's a massive stagnation right now.
Excuse me. So what happened is, I changed from CEO to Chief Compliance Officer. And all we were doing is compliance.
Okay.
And the rest of our team was software engineers. And what happened is they were focused on what they could do is we had a limited amount of customers, we were allowed to onboard like 500. So they were just focused on making those 500 happy.
Okay.
So they were coding, they were working away, they were building an app that is beautiful, that
Yes.
is user-centric. It's not scalable yet, but they were working. And my job was to keep unlocking this, but keep motivating everyone. And actually, day by day, as we improved the app with this small cohort, like we started to get more and more excited that this could blow up. I remember one of our engineers saying, Kiiru, do you think that they don't want us to launch because we're going to take over? And I was like,
it's very possible.
Listen, I ain't trying to speculate, but if they do let us, then, you know, we have to. Like, we have to. So there was a growing sense of excitement just because of how good the product was getting. So, yes, we were not in the market, like, widely, but we were iterating on the product.
Yes.
And actually, by the time we got closer towards getting the regulation, everyone was so excited. Like, we were just, like, you know, kind of charged up for it.
Amazing.
So we kept the energy. It was hard, no doubt. There were moments where, you know, there was low confidence, but the fact that people were starting to love the app really gave us hope.
Amazing. Well, thank God that we had a product out in the world for you to iterate with and some users to start with. So that's been the kind of, you're saying the sort of low point. And then another thing that I really wanted to ask you about is, at this point you've raised a few million. How does that look? Because everyone can speculate on how an organization spends the money in the bank, especially in the environment that we're in, where like you really need to prove that you're worth another round. How have you approached, and I'm assuming, or your leadership team approached expenditure? One of the reasons why I ask this is I don't know whether it's Michael at YC or Paul Graham. They say you have to make yourself hard to kill. They say startups are like the cockroaches of business. So how have you approached? Okay, now we've got this cash in the bank. We're gonna do this.
That's a great question. I did not have the answer to that question. In the beginning, all we did was we listened to the advice we got from YC. That's all we did. We didn't deviate from it. We didn't spend. I'd never raised millions of dollars. Right. You know, and they were like, "Here's how you do it. You go on demo day. You pitch to investors. You share your vision. You sign this document. You get in the bank. And once you have it, here's where we've seen people go wrong. Right. Here's where we've seen people go right.
Perfect.
People have gone wrong by overspending, hiring the wrong people, you know, building stuff no one wants, etc., right? And I was like, okay, maybe we don't do that. Yes. And then they were like, here's where you go right. You have 18 to 24 months of runway. Yes. If you're not in market, you reduce that burn, the amount you're spending monthly, and you extend your runway for as long as possible. And that's it. That's what you do. So when we raised capital, we met with our group partners, and we presented our plan of spending, and they were like, okay, here's how, again, the same conversation of where people have gone right, where people have gone wrong, and here's what we want you to do. And to be honest, we just followed that plan. We just didn't deviate. We were like, we don't know how to do this. We've never done this. We just followed that plan. We followed their plan, our group partners' plan. We kept our spending low. We kept our eyes on kind of not just the next sight of the next round, but sight of the targets we needed to reach for the next round. And so it's simple, but we just followed the prevailing advice that we got.
Well, kudos to you. I think I read somewhere, again, this might have been Paul Graham, that because founders tend to go against the grain, they tend to be like, someone gives them advice, they'll probably go the opposite direction. Kudos to you and your team for being like, they actually know, let's just focus at least this bit. Let's follow them.
In fact, we had a lot of humbling moments where actually we were like, we are plebs. We don't know what we're doing. We're gonna follow advice of people that do. Because I mean, you sat there speaking to mentors that have built unicorns, and so you're sat there like feeling small but inspired, but also thinking, why would I not do what you're telling me? And one thing that they always say is that, we see people, even though we tell them this is good advice, they all end up making the same mistake. So if you can avoid it, don't do it. And actually, all we did was just follow the advice. We followed the advice. We periodically checked with them to see, hey, here's our status. How are we doing? And they're like, okay, you have uncertainty, you have this risk, here's how you control it. And I think that one of the surprising calls we had with Michael is there was a point in time when the funding winter was really starting to hit, and he sent out a really strong message saying, everyone brace yourselves, brace yourselves. This was 2021 when, interest rates and
Silicon Valley Bank as well.
Exactly. No, SVB happened in 2022.
Wow. So even after.
Yeah, after. So we got an email saying this is, we're about to see a real change in patterns of investing. Brace yourself. And we had been braced.
Right.
We didn't have to change anything.
Right.
And so we just didn't reinvent the book there. We just followed the sound advice.
One of the books that I'm reading at the moment is Anti-Fragile by Nassim Taleb. And he's a former options trader, and he basically talks about like how the concept of anti-fragile is how do you benefit from chaos. And one of the things that he puts in there, he talks a lot about Greek mythology and all of these things. And he basically says one of the ways that you can benefit from chaos is having large cash reserves so that you can be cash offensive in like a down period. So it's so interesting that you say you were ready for that because you weren't enjoying the good times as much. You were almost like paranoid of like what could be. So that's you're a wise founder from that perspective.
I'm gonna be honest, like even our founder salaries were so low, it was unbelievable. To be honest, we were just happy to be doing what we're doing. Amazing. Right? Like we kind of all were so like it was such a blessing to just even be in YC that we were like, listen, we're gonna optimize this to the T. Like anything that comes is a nugget, we're gonna optimize it. And looking at your example of the time to be on the offensive with cash reserves, like that wasn't even in our mind, right? But at the point when we were launching, so 2023, we were one of the only ones able to like mobilize capital and actually pull something off. Wow. And that's because we had been kind of frugal from the beginning and actually were able to now gain traction. And I think it just goes to show like the humility of not knowing continuously.
Yes. And
also just I think founders sometimes rate themselves too much. We didn't rate ourselves at all. Like, we were just like, listen, we don't know shit.
Right.
We'll take the playbook given to us and we just gonna follow this.
Execute against that.
Exactly.
Speaking of traction, what does a monetization look like for Fingo at the moment?
So monetization is similar to how most digital banks have monetized. So the strategy for digital banks has always been to kind of enter a market and offer superior customer service, lower price point, so either lower transactions or some form of promotional item. And then from there, you slowly monetize using value-added product, third-party services, kind of FX, and that's been the playbook. Again, not reinventing the wheel. So we had Tom from Monzo as an early investor, and he kind of took us through how they began monetizing Monzo. And he was like, one thing we should have done is monetize earlier. And I was like, fair enough.
Wow.
So what does that mean for us? And what we were planning to do is raise, or rather drop the transacting fee in Kenya to 0.
Okay.
So that we can get a ton of users and then monetize afterwards. And then we were like, maybe don't drop it to 0 because we don't have to, right? So we did some kind of price elasticity and realized that there's a portion, slightly above 0 where we can still make money on transaction fees and still kind of hit our goal of incentivizing people to come on the platform. So we did have to tweak it based on what we learned from other digital banks, but ultimately it doesn't seem like you get profitable until you hit critical mass, and critical mass is, above like 3 to 4 million customers.
Okay.
So that's usually that's what we've seen with other people.
Okay.
The goal for us is, can we do that sooner? Can we get
Okay.
1 million customers and then be profitable?
When you say the critical, few questions now. When you say two things actually, let me start backwards. Were you scared of monetizing? Because theoretically, there's a lower disposable income in our continent. Were you ever scared of like, how much can we push this in terms of monetizing? And then the second question is like, when you think about critical mass, are you saying like that 3 to 4 million in Kenya, or sort of wherever? We just want the million in the continent using it.
So your first question, were we scared of monetizing? I want to say yes. I think in the time when we conceptualized Fingo, we had very idealist views, which were, let's make everything free and enjoyable. But actually, that's not a business.
Exactly.
That's a charity.
Yeah.
And we were running a business.
Yeah.
So, you had to take the heart of, that wanting to make it enjoyable and be like, let's make, like, it's not enjoyable if it's not sustainable. And if it's not sustainable, if it's not making income. So how can we make money while adding value to this customer in an unbelievable way? And so what we did is we had to build very interesting payment networks. And ideally, the way you make money in payments is that typically when you start, you have like 3 or 4 layers of payment providers, and whenever someone makes a transaction, it goes those 3 or 4 layers, and by the time it comes to the net profit, it's tiny. So what you have to do is you've got to slowly build your own processors so that you have no fourth or third or second parties. You have your own software and you have substantial revenue. And usually it took digital banks a long time to end up replacing that. So what we started doing early on is we started kind of building that stack ourselves and building it really early so we can monetize as much as possible in the beginning. So that's a move that we made based off of understanding, okay, let's make it sustainable early. And we are starting to see the benefit of that.
Awesome.
We're starting to see the benefit of that. We're starting to see a really, really unique payment system emerging.
Amazing.
Very, very interestingly. And that's something we didn't anticipate we had to build. But because we understood, let's make this sustainable, it's something we eventually ended up building.
Interesting. So I suppose you were talking about a few partners that you tried to use early on. You're basically trying to build that for yourself. Okay. Interesting.
You had a second question.
Critical mass.
Critical mass,
yeah.
Yes. Critical mass is in Kenya.
Okay.
Again, if you asked me when we started, what does critical mass mean? I'd have been like, everywhere. The whole continent. Nigeria, Ghana, Sierra Leone. Give it all to me.
Yeah.
But a few humbling years later.
Yeah, also I can imagine with what we just discussed, the payment networks. I was speaking to a few years back, Benjamin Fernandez at Nala, right? And then I told you about him as well. And I think there were quite a few times that he was looking for a payments partnership because they're going after like a lot of different markets to be able to do sending money back home. So just that alone would have been, you'd lose your hairline, man.
Yeah. I mean, it's the reason it's not there is just it's hard to do. And the people that do it capture such a strong part of the market that they can command such a high fee that by the time you're partnering with them, because they're the only ones, you're not making much, right? So
interesting.
Yeah.
Okay, so transitioning a little bit, you spent some time in San Francisco, and one of the things you told me was like, the shit here is mad. You were like, bro, like these men are talking about flying to the moon. That's what you said to me. So one of the things that I'm writing about at the moment is actually called In Search of Ambition, and what I'm interestingly seeing is like where people convene and how ambition like multiplies in a certain space. What was your experience like in San Francisco?
San Francisco is very interesting, and I would love to read When You're Written in Search of Ambition, because it is something that you think you have until you meet a place where it's multitudes higher than yourself. And so we were in kind of a group in San Francisco, introduced to various circles, people that have IPO'd and SPAC'd and are now looking at competing with SpaceX, competing with Tesla, competing with not working for competing, right? Competing with Stripe, really big companies that you think are unshakable, unmovable. There are people who are saying 10 years from now, my product is going to be bigger than this guy's.
Wow.
And sitting there listening to that, even the AI revolution, I was standing at a talk where some Altman was talking about his thoughts on the future, and listening to that and listening to how the world is going to change, and the fact that there are people inside who are going to be part of that change made me really think about what is my ambition.
Okay.
Is my ambition, am I even ambitious? I felt very in some circles I was like, I'm too ambitious. In that circle I was like, maybe I can think a little bigger. Maybe I can think a little bigger. And there are things that are happening that will change how we move, transport, how we communicate. The telecoms are moving into space, how we look at health. There are things moving in so many different directions that they're changing fundamental industries. And so that for me was humbling, and that for me taught me to always kind of check myself, just keep checking yourself. You're gonna you're where you are, you're comfortable, but someone's gonna come and you're not gonna see them coming. And these are the same people who no one believes. And that actually taught me something interesting, which is if there's a group of smart people that you really admire doing something you don't understand,
go over there and have a look.
Instantly have a look. Instantly have a look. And that for me was San Francisco in a nutshell. I mean, there's a lot of other things that were surprising to me. It was my first time there. Obviously the US is its whole dynamic. Those mad inequality.
Yes.
They have
homelessness.
Homelessness, and not even that, but they have the divide between white and black in San Francisco and Oakland, which is across the bridge, is also so apparent. Being black in tech, there are all these things that were new that I was experiencing, and also being black and African in tech. There's a couple of really interesting new things that were dynamic, I'd say. And then being part of I think minority as well has its own implications, good and bad.
Okay. Yeah. Do you want to?
I mean, I'm still exploring it.
Okay.
I'm not.
No, we'll off air.
Good and bad. Good and bad. Yeah.
Okay. I'll tell you why you're ambitious, and this is what I wrote about in the thing. I think pure ambition is what you said before. You were just happy to work on Fingo, you and your team, and you were pursuing Fingo for Fingo's sake. In terms of that, going to the moon might look ambitious, but it may be very insecure. So I think you are actually very ambitious, and those people are also very ambitious. But I think there's a level of pure ambition, and there's also a level of extrapolating something. Yeah. So I think that's quite interesting.
That is true.
What has last couple questions? What has surprised you most about the Fingo customer?
It was something a customer said. So we built this app. We spent a long time waiting for regulation building it. Had a lot of fancy features. It had GIFs and
nice.
It had really cool interfaces, and you could
I remember you showed me. Yeah, it looks sick.
I love talking about it. You can make a budget. Our team are phenomenal. Our CDO, CPO, engineers are phenomenal, and they built an incredible product. And we were talking to a young user, 19, who had just signed up, and he literally had tears in his eyes. I was like, what is the coolest thing about Fingo? He had tears in his eyes, and he literally said the most unexpected thing that we completely overlooked about the app. And he was like, I don't have to go to town.
Wow.
He's like, you mean you're telling me I don't have to go to the branch and deal with these guys?
Wow.
Like, he hated it. He had been there like 3 times that we street. I
Wow.
was like, yo, we completely forgot about why we started this thing.
Yeah.
The initial reason we started this thing is because it's just a bad experience to open an account. We had spent so much time optimizing on what you do when you get the account. So like all the cool things, the cost, the features, but actually the simplest thing we built was just that digital onboarding. That ability for you to like scan your ID, take a selfie, we verify your identity, and you can digitally in 5 minutes just get an account.
Amazing.
So that to me was like, oh yes, let's just focus on
that.
your problem,
Yeah.
on that,
Yeah.
because everything else is like nice, but that is actually why we started this.
Did you ever think about the second and third effects that you're having on Nairobi? Traffic. Just by people not being there. The reason why I say this is because in the first interview I had on Prolific was with Isaac Aboa, and he's building Mello, which is like a B2B SaaS company. And he's trying to give data to companies who... He's basically trying to get data across to people who want to know what the customers are using to transact. So he wants them... If you want to know what people are buying in mum and pop shops, he's going to put a way for you to pay digitally and understand what moves revenue. Anyway, part of what he's doing is he's also allowing companies to deposit product where it needs to be. I don't know if I explained that very well, but let's say I am a manufacturer and I want to know what this mum and pop shop needs this month. I see what people are buying, and then I send people to deliver it. Rather than sending the same person there twice, he basically is optimizing it so that, this person goes here, this person goes here, this person goes here. The roundabout way of me talking about this is, have you realized that, okay, you're building a fintech, but you're also kind of solving for
Other things.
other things?
Yes. That is starting to become apparent to us.
Right.
It wasn't in the beginning. It is starting to become apparent to us that financial services, it's not just, we initially were solving like a personal finance, like just get a bank account. But what we're seeing people use the app for is like running businesses, right? So now we're inspired to build a business account. What we're seeing people use the app for is just ensuring security. So, for example, when cash is in your pocket as physical cash,
Can get taken.
It's a problem. If you're a shop and you have physical cash, it's a problem. The logistics of getting that to the bank
That's a problem.
is a problem. In insecure areas, it's a problem. Being able to fully digitize that, you're giving people security, you're giving people more predictable income. You're like this third, second order things, which is, I think, is what you mean.
Yes,
that
exactly.
are happening.
Exactly.
We weren't measuring this, but we're starting to receive feedback that this is happening.
Wow.
Yeah.
Phenomenal. All right. I have one more question for you. And I don't know if this is actually something that you're going to be able to answer because you're too busy. What are you reading at the moment? Or what have you read that that kind of made your brain tick?
Good question. The most recent book I read was, let me remember the title. It was by a guy called Quinn. It was Failing to Win.
Okay.
So Failing to Win was a story of a fintech built in Southern Africa, not South Africa, I think it was Zambia, Malawi, or Zambia and Malawi, in the from 2009-ish. And it was written in retrospect, or in hindsight, from the founder who didn't think, or who left and felt like they didn't win. And it was effectively being built around the same time M-Pesa was starting, and M-Pesa became this big company, but they didn't. And he wrote a book. The book was Failing to Win, and I remember thinking, I've not seen a book by a fintech founder in Africa. So let me read that book and understand where they went right and where they went wrong. What did I learn from it? I learned a few things. One is don't be too corporate.
Okay.
So the book makes reference to a lot of discussions with their board, a lot of discussions, like they became a big company and they had to like have red tape, and that red tape slowed them down. And so they were launching new exciting products, like they could have easily been one of the largest fintechs, in the world right now. And I think they just slowed down because of their bureaucracy. They became slightly too big and slightly too slow. So remaining like nimble, fast, agile. Another thing I learned is that they were I think 3 or 4 co-founders, and they had each other's backs.
Okay.
Like things were hard many times. Like the book takes you through like ups and downs,
Yes.
and moments are like, hey, we've been through that. And I was like, I love it, but they made it through a lot of those downs because they had co-founders.
Okay.
So if there's anyone starting something,
Yes.
get a co-founder. 2, 3, get people you love that you can go to war with. And I didn't really appreciate how hard that was until reading that book and seeing how their 10-year journey together like was only possible because they were together. So co-founders, they're your people you go to battle with, they're your friends, they're your family.
Yes.
It's a relationship. Like
Yes.
I speak to my co-founders more than I speak to anyone.
Yes.
Literally. Yes. So that is something I say would be a big lesson I took from that book.
Amazing. And I suppose the only thing that I can basically say to finish up is the reason why I'm always inspired talking to you is not because of just the things that you do, but you do something very interesting that I think not too many people observe in trying to win, observing failure and avoiding it. And I think it was James Clear who said, or it was Shane Parrish, they said, success is in the things you choose to avoid. So I think you're happy to observe failure, and obviously you have your North Star of success. So, my bro, congratulations on everything.
Thank you for having me, and I must say I've always been admired of your storytelling. You're brilliant at it, even from the Pamoja days, even to the Warwick Africa Summit, which I would love to have another episode
for sure.
From founding that, you have been an incredible storyteller, and I've been inspired by your work, and I'm so humbled. Thank you for having me, man.
Anytime. The last thing, do you have anything at all you want to share with anyone? Any action points, anything coming up for Fingo, anything for investors?
Action points. So I kind of want to give a parting shot to everyone, which is go hard.
There you go.
Go hard. You can fail small or you can fail big, or you can win small or you can win big. I would personally I'd rather whatever I'm doing, I'd rather go hard either way. So yeah, that's my parting shot.
Amazing. I can't add to that. This is Kiiru Muhoya, and he's prolific. Thanks, everyone.
Thank you. I appreciate you, man.
You are too good, man.